Hi and welcome to FinCrime Agent. Today we have the pleasure to interview Jana Tyler, a close friend of mine and a professional who's been working within the last decade in the UK immigration sector. This is an industry which has been exposed in some aspects to financial crime, and in today's interview we will talk more in details about the UK Tier 1 visa scheme to discuss how financial crime risks and regulations has evolved throughout the years. So without further ado, let's get started with my guest of the week, Jana Tyler. Hi Jana and welcome to FinCrime Agent. How are you today?
Hello Marco, thank you very much for having me.
Now, thank you for taking part in this, Jana. It's a great pleasure to have you on my channel, and I really look forward to this Q&A session with you. Today we will talk about the UK Tier 1 Investor Visa Scheme, but before we go into further details about the related risks around the scheme, could you please share with the audience your background and tell us what you are up to in these days?
Yes, of course. I have been advising private individuals and corporate clients in relation to their UK immigration matters since July 2012. At present, I hold the position of a senior immigration consultant at Channel Solicitors LLP.
Thank you. Perhaps we can then start with a high-level overview of what is the UK Tier 1 Investor Visa Scheme for those that are not very familiar with this type of application.
Yes, the existence of the Immigration Investor Scheme goes back to October 1994. The investor visa category caters to high net worth individuals, allowing them to make substantial financial investments into the United Kingdom. To qualify under the scheme, the applicants must have funds amounting to no less than £2 million of their own under their control and disposable in the UK. The funds must be invested in a way of qualifying investments, such as share or loan capital in active and trading UK registered companies. In remark, those applicants who were initially granted UK investor visa prior to 29 of March 2019 can also rely on investments into the UK government bonds. The initial investor visa is issued for 3 years with the possible extension for a further 2 years period. Settlement can be obtained after 2, 3 or 5 years of lawful residence in the UK, depending on the total amount of funds invested. This visa category has always been attractive to overseas applicants since it leads to settlement in the UK and subsequently to a British passport, with family members allowed to join the main applicant. Both investor applicants and their family members have freedom of employment and studies in the UK.
Thanks for clarifying that, very clear. And since the first immigration investor scheme was introduced back in 1994, if I'm correct, I know that the Home Office requirements have gradually changed over the years. Could you please share the main milestones that have affected the application process, as perhaps how these have impacted the volume of applications received by the UK government?
Yes, when the scheme was first introduced, the requirements were fairly simple. In order to qualify, an applicant had to have money in an amount of no less than £1 million of their own under their control and disposable in the UK. At least £750,000 out of which had to be invested in a way of the UK government bonds, share capital or loan capital in active and trading UK registered companies. In the past 27 years, the immigration rules for UK investor visa have undergone significant revisions. I would like to highlight the most important changes made to the scheme in the chronological order. The first clarifications concerning the investor visa were added to the immigration rules in June 2008. As such, applicants could now rely on their personal assets in addition to the investments in the way of UK government bonds, share or loan capital in active and trading UK registered companies. Furthermore, prospective investors were now required to hold the funds in the regulated financial institution and had to invest them within 3 months of obtaining an initial visa. The Home Office then introduced a new requirement allowing investor applicants to settle in the UK after 2 years by having invested at least £10 million by way of qualifying investments, or after 3 years if investing at least £5 million. According to the immigration statistics, which are being released by the Home Office quarterly, the faster routes to settlement started attracting more investors to the UK, reaching 125 successful applicants per quarter by the end of 2013. This was a 25% increase from the previous quarters. In 2014, the minimum investment threshold was increased from 1 million to 2 million pounds. In the fourth quarter of 2014, there were 472 successful applicants, which resulted in a 200% increase from the previous quarter. This is due to applicants rushing apply under the old 1 million rules. The Home Office then introduced the anti-money laundering checks and obliged applicants to open a bank account in the UK prior to applying for UK investor visa. With the introduction of these new rules, the number of the new investor applicants initially decreased, but commenced a steady recovery by the year 2018. 2 years ago, in response to the criticism for the lack of effective, upfront and transparent checks by UK government, there were further changes made to the investor scheme. As such, UK government bonds were now removed as qualifying investments for new applicants, and the requirement to hold the funds on the account for 90 days was extended to 2 years. Also, the banks now obliged to carry out due diligence checks and know your customer inquiries and confirm to the Home Office that these have been done.
Very good. So they've been changing the rules to make it more difficult and hopefully less appealing for money launderer to actually go into this space. And I'm aware that in 2014 further and significant changes were in fact introduced by the Home Office in the investor scheme. And at the back of also what you mentioned, was there any actual economic benefit to the UK from the UK investor scheme? You mentioned there that some thresholds have been moved, for example, in terms of the amount that needs to be invested. The typology of investment has also changed from the initial requirement that were proposed by the Home Office. So I'm curious to understand if that actually benefited the economy of the UK based on these changes.
With millions of pounds being funneled into the UK economy, one might have thought that there was economic benefit from the UK investor scheme. Sadly, that appeared not to be the case. On 9 of October 2013, the Minister for Immigration asked the Migration Advisory Committee to review the investment threshold and whether it's appropriate in order to deliver economic benefits to the UK. The Migration Advisory Committee found that the direct investments themselves were not of a great benefit to the UK. This is due to the fact that majority of investor applicants choose to invest in less risky UK government bonds. Essentially, when investing in this way, the applicants loaned the funds to the UK government for the period which was required by them to gain settlement in the UK. Once the settlement was obtained, the investments could simply be withdrawn. It was also found that the scheme facilitated the investors' needs in relation to tax evasion by laundering their wealth to the UK through the investor scheme.
So at the back of what you just said, and in line with some of the areas you covered before, if we look at the Tier 1 investor visa scheme from a financial crime perspective, the scheme was criticized as it facilitated the entry to the UK of super wealthy with marginal investment gains, and this is also echoed by what you mentioned before, if I understood correctly. But on the other hand, significant risks of money laundering were seen. Could you expand on how those money laundering activities can take place throughout the Tier 1 investor visa scheme?
It is important to note that the Home Office has always had legal provisions in place to deter against money laundering. For example, the applicants have been required to prove both the source and the origin of funds available for investments. In addition, the applicants must be in control of their funds and have to prove that the funds have been obtained and transferred to the UK by legal means. If insufficient evidence or information is provided, the application will be refused. Nevertheless, according to the Transparency International UK, a substantial amount of corrupt wealth stolen from China and Russia are highly likely to have been laundered into the UK through the investor scheme. So, Marco, as you correct in pointing out, how could these illegal activities potentially take place? My personal view is that the lack of insufficient money laundering checks imposed by UK government on the applicants in the past might be one of the reasons. In addition, the investor visa requirements might have been unfitting with the fast evolving financial industry. This might have potentially opened the doors to the financial crimes to take place.
Yeah, makes complete sense. So thank you for expanding on that, Jana. And one question is based on your experience, right, dealing with applicants of the UK Tier 1 investor visa scheme. I understand these are super wealthy individuals, so the personality sometimes may clash with the requirements that can come out of the regulation. So I was wondering, how willing are high net worth individuals in providing the required documentation in order to comply with the CDD or the enhanced due diligence process, for example?
Well, in fact, the due diligence and all associated money laundering processes have always been conducted by financial regulated institutions in the UK. Having said that, I only heard positive feedback from the financial regulated institutions about the client's willingness to disclose the required information and provide the necessary documentation.
Okay, so there is actually an open mindset on that aspect. I presume by now they understand about the needs to comply with such regulations, and there is a positive view on that. I'm pleased to hear that. And I recall a press release from Channel 4 and the Sunday Times back in 2019, if I'm correct, where they went undercover to find out more about the exploitation of the UK investor scheme by Russian and Chinese investors. So this is in line with what you were saying before. They expressed concerns out of that report that financial crime can still take place, as there are still ways of going around the system. Do you think their view are still applicable today after those changes that have been recently implemented?
The reality is that money laundering can occur anywhere and at any time. Money launderers generally tend to seek out countries and sectors which show a low risk of detection due to weak or ineffective anti-money laundering programs. Sadly, the UK investor visa scheme has been one of the areas which have been targeted due to lack of effective, upfront and transparent checks. In the recent years, the UK government has made several changes to the requirements of the investor visa aimed at reducing the risks of money laundering activities. Due to pandemic outbreak, it yet remains unknown whether the tightening of the immigration rules has brought the desired effect in relation to anti-money laundering activities. Certainly, the immigration requirements are now more restrictive than they were before. However, everything comes down to the correct interpretation of the rules and whether the current rules can be interpreted to benefit the investor applicants in their pursuit to launder the money through the investor scheme.
Do you think we should expect a further tightening of the UK Tier 1 investor scheme rules taking place anytime soon?
Well, as was highlighted earlier, there have been some drastic changes to the immigration provisions of the investor scheme, which have been aimed at reducing illegal activities and bringing benefits to the UK economy. Largely due to COVID-19 outbreak, there were fewer new investor applicants in comparison with the previous years. More importantly, for 2020, the refusal rate of the UK investor visa was as high as 20%. Naturally, we should wait for this year's statistics to be released in order to fully evaluate the result of the changes. If there will be fewer new applicants this year, my view is that tightening of the rules might result in the collapse of the scheme altogether.
And if we want to find out more about any progress that the UK is making in this field, for example, assessing the effectiveness of the UK Tier 1 investor scheme, or even about the efficiency of this visa program against the money laundering risk, is there any official source or information that we can rely on?
Well, I believe that Migration Advisory Committee reports are a reliable source when it comes to evaluating the effectiveness of the investor scheme. Other than that, I'm happy to catch up with you some other time when there will be some clarity on whether the anti-money laundering measures introduced to the UK investor scheme have been effective.
I would love that, Jana. And with that, we got to the end of our discussion today. I want to thank you, Jana. It was a pleasure talking to you today, and I hope we can pick your brain again soon, as you promised, about those very interesting topics.
Thank you very much, Marco, for having me.
I will leave your LinkedIn profile in the description of my video in case anyone wishes to get in touch with you directly. And a quick reminder for those of you that are watching and haven't yet subscribed to FinCrime Agent, remember to do so and press the bell so you will be notified every time new videos like this one will go live on my channel. So thank you, Jana, one more time for the interesting information shared, and thank you all for watching. Until next time, see you soon.